Looking at S&P 500 M&A futures, and we have a nice bullish structure working higher. We may have potential long opportunity high-low confirmation of the trend line. I need this signal bar to be nice, strong bullish bar. Actually, decent bar is good enough because we are at key entry point. So let's see if we can get a good bar here. Okay, we have a nice bar, so I'm going to drop my limit order. All right, traders, I'm resuming the video because I dropped the limit order. And this right here is high-low confirmation setup. We're going a little bit sideways. I'm thinking if I'm supposed to put my stop loss below the second entry long, but I'm going to keep it here. The risk is quite small. So this is a high-low confirmation setup of two key entry points. We have the EMA and the main trend line. This is the beginning, first swing, second swing. This is the third swing confirmation. And this is an uptrend, so I'm only thinking about reasons to go long. New high, 2 legs down, new high, 2 legs down. The second entry long is decent enough. I waited for a confirmation and stop loss has to go one tick below the signal bar. I'm scalping for 10 ticks, 8 contracts, and 1 contract is left only as a runner in case the trend keeps going and we get the fill. So I'm going to move my stop loss to break even because anything is just a bonus. This was a really strong uptrend. You can tell you can't even break below EMA, tiny pullbacks. Sellers are getting trapped every single time trying to reverse the market. We identified the key entry point, first 2 swings, perfect bounce off the trend line. This is what price action trading is about. And right now, let's just manage the runner here. So now if I'm going to go back and look at the structure, we started with a little bit of a consolidation. I was thinking also about potential wider downtrend like this. We start with the bearish structure, break. So the whole time I'm looking for second entry short. It was a new low, first entry short, second entry short at the EMA. But problem is you have short-term uptrend in play. Lower high, you can consider lower high. The signal bar is a little bit weak and there's no clear break in your high. Now this is a decent tail off the top. If you took it, you can consider, I'm going to mark it green because it's not a bad trade. Lower high confirmation setup. The whole structure started very bearish. You expect new low for this downtrend and the failed second entry low would be ideal, but the signal bar has a bad tail at the bottom, so I can't really mark it. I was ready to go short here, but there was a bad signal bar. Break new extreme. Market reversed to the upside, so I was looking for channel. Initially I connected these swings right here. I was playing overshoot at first, but as you keep going higher, you're negating the overshoot. I'm going to make it a little bit wider. And now I'm playing this one because it fits really well. Look at the market geometry. This is what pure price action trading is about. There was a visual second entry long double trap where you have to use double bar entry because the bar is bullish bar. And now we have 2 legs down again. Market moves in pairs of twos, new high, first entry long, pullback, second entry long. So I'm going to consider another high-low confirmation setup to test the new high because there's a broad correction and uptrend still needs new high. Right, traders, we ended up having high-low below the exponential moving average, followed by a failed second entry short. Now the failed second entry short, you were able to survive by one single tick. This is why we keep the stop loss one tick below the signal bar. You cannot exit early, pullback can happen. You have to follow the rules, be disciplined. You expect new high, so failed second entry short was great. Even the high-low is okay because you can definitely find some support area right here. So decent signal bar, trend was very, very strong. So definitely more advanced trader can consider taking a high-low like this. There are uptrend played away to break new high. You have felt second entry long right here, but you don't want to sell because simply the uptrend was too strong and chance of uptrend continuation is too high. This right here is what I would call area of development. You can't really go short and you can't really go long. Downtrend played at the break new low. Then you have push above EMA, but you can't really take anything because high-low, bad bar below EMA. Felt second entry short, not fully at the EMA, but this push above EMA right here is basically confirming, hold on, why the market is not reversing down. We are working higher, so around this point, you have to start looking for some different channel. I was looking for some spike in a channel pattern, perhaps something like this when you're watching this live. This makes sense because after new high, you keep working higher. Another 2-legged pullback, 1 leg down, break, second leg down. Push above EMA is indicating resumption, and you can already see the pattern. You can see the pattern while you're navigating a bullish trend. Correction, 2-legged pullback, you draw the short-term channel, breaking extreme, and the push above EMA is always the resumption that a new push phase is about to start. And the way we capitalize on the new push phase starting is a high-low or failed second entry short. So now you have high-low, but it's not fully above the EMA, but okay enough. But the failed second entry short context-wise is great, but you have to use double bar entry. And honestly, I would use deep limit order, and because it never came back, you can't really get in because it's quite big. But context wise, it's great. And by the way, if you're asking why I didn't take the failed second entry short, simply because I was done with my 2 trades and I didn't want to push it. But it would have been 3-0. So this would have been a great day. But you cannot be greedy in this business, otherwise you will give back your profits. We had overshoot and quite substantial one, and it felt too bullish. So what I did, I drew now channel something like this. But this is sort of like a secondary channel. So much into room here, so much into room here. So I definitely needed some high low. You can't take a plain second entry long like this. Number one, it broke below EMA. Number two, we just drew this secondary channel. You're not really sure if the first one has overshoot or if this one is valid. So in a situation like this, when you're predicting different channels, you need some confirmation, okay? Don't jump to conclusions too quickly. Wait for some confirmation for additional push phase. And here you have push above EMA, high low, and another failed second entry short. Exactly what happened here. The reason why I don't think this high low is great, because you can make a case for a slightly wider downtrend like this. Okay, this looks pretty good. So I feel like we need a failed second entry short. It's not full at the EMA, but close enough. But if you took a high low here, definitely calculate the risk as well, because the uptrend is just super strong. Second entry long at the EMA, we can only take. Not full at the EMA, quite a weak bar. It's not a bad trade, but it's just not full at the EMA. Okay, market is working hard. Correction, break new low. You already know what to expect. Push above EMA. Price action works the same. Can reset first entry long. Pull back. So this area is a second entry long. Inside bar, we can only take inside bar. Otherwise, you can go long here. Okay, no real trade here. No high low, nothing. Breaking below EMA. Okay. Now, I decided to mark this high low losing trade because you expect new high for the main trend. The reason why it failed is because notice what happened here. Prices failed to push up here and here again. So you're getting signs that market keeps making more legs lower and lower. This is a sign that there are sellers in the market, and a failed second entry shortfall by a second entry long, first entry long, second entry long can be considered. But now it's getting too late and buyers are taking profit. So phenomenal day. Really great trading day. A lot of good setups on the way up. Even if you're more aggressive in taking a lot of risk on these few sketchy trades, you can have a lot of trades today. So a day like this is what we absolutely love. And once again, this is what I keep saying a lot. As a trader, you don't really need to be profitable every single day. All you need is just a handful of these great trades where you can really make some easy money. You can get few runners, really build the cushion and the capital you need. So you don't have to be perfectionist. You don't have to make money every single day. You have to remain open-minded. And your goal as a trader is simply minimize losses when you're struggling, when you're not feeling well, and when the market gives you easy day like this, you just have to capitalize on it. You have to trust the rules, and this is where you make the real money. And remember, when the trend is very, very strong, there's a high chance of many patterns working together and trend continuation. We had it a few days ago when we had the big downtrend. Now we had the big uptrend, and even after breaking new high of the initial channel, prices just keep working hard, so you have to adapt to a brand new uptrend. I'm going to wrap it up. I hope you had a good trading day, and I'm going to talk to you next time. Good luck in your trading.